So the UK's Financial Conduct Authority have just warned that property prices in the United Kingdom are about to collapse this year. And what's more, what most mainstream media have seemingly missed out is that this crash will be much worse than 2008 in reference to property. By now you are all used to the doom and gloom on this channel with a little sprinkle of humor in my videos, but this one won't have any humor. In fact, it's actually really scary what I'm about to tell you. And this video is a real warning to everybody in the United Kingdom, homeowner or not, everybody needs to be aware of the upcoming situation. Because at some point, I promise you, if it does not directly affect you right now, it's going to, or at least damage and affect somebody very close to you. First, I want to read you the data from this report, and then I'll unpack it all for you and also give you some tips on how you can actually make sure you have a better chance of survival. Because at this point, make no mistake, it's now outright survival. The FCA have warned that 770,000 households are either at risk of missing mortgage payments over the next 2 years or are already left behind. Furthermore, on top of this, another 570,000 mortgage borrowers may face payment shortfalls over the next 2 years. In essence, meaning well over 1 million households are currently at risk, and these expectations are expected to grow. Now, some of you more new investors in my demographics have probably not really experienced the 2008. Even myself, I was still a young'un without a beard.
Impossible.
What's going through your head might be, so what? Some people might miss the odd payment. What else is new with the world? Well, let me tell you, it's a lot worse than you think. According to the FCA's chief executive, many of these homes are already thousands of pounds behind their current home payments, with over 117,000 borrowers failing to pay a sum equal to more than 1.5% of their total mortgage. This 1.5% is absolutely shambolic. Now, let's say you fall in this category and you just hit the 1.5 threshold. Let's say you bought a house or a flat for about £250,000. You paid a 20% deposit, or that's what you have as equity, and you have a total mortgage left over of about 200k. If you paid back just 1.5%, or in other words, £300,000 annually, it would take you well over 60 years to pay back your mortgage. And that's on the previous rates. We know interest rates are going up and probably going to stay there for a long time. So this figure in itself is sort of conservative. Now, majority of people are paying much more than this 1.5%. So you can expect that this figure will be much higher. But the statistics show that many just simply cannot afford their mortgage payment. They're missing payments, missing deadlines, whatever the excuses may be. As it stands, over 100,000 homes in the UK are paying less than a 1.5% mortgage fee annually, and it's clearly not sustainable for not only the investors, but also for the financial institutions and mortgage lenders. Anyway, back to the report. The FCA's warnings will also raise further concerns that the flood of forced property sales in the coming years are going to drive house prices even further down. And all of this is happening amid the biggest living standard squeeze on current record. The report has also stated that the number of defaults happening this year and next will also depend on how many people ultimately lose their jobs. And with layoffs continuing to increase rather than decrease or stabilize, you can only expect that the unemployment and these figures of people who are going to ultimately lose their home to go much higher. The FCA is predicting that the economy in the UK is to enter a recession that would persist at least until the end of 2023, maybe even longer. On its account, the Bank of England has also warned that millions of homeowners with fixed rate mortgages would see their payments climb by an additional £3,000 a year as borrowing costs increase. The monthly mortgage payments for more than 800,000 homes will triple this year alone. Imagine if you went to the gym one day. I mean, after all, it is January, and they just said, sorry, sir, you can't go in today because membership prices have increased 3x. So pay up if you want entry. You'd obviously just tell them, shut the up. Unfortunately, with mortgages, we cannot just cancel a direct debit and join a cheaper gym. According to the Resolution Foundation, a drop in housing values will leave nearly 140,000 young people living in a home that is worth much less than the mortgage they are currently paying for it. In essence, it's like buying a Tesla a year ago. It's much cheaper today, and you're going to struggle to sell it on a second-rate market when somebody can get a new one pretty much cheaper. On its account, the National Office of Statistics showed that an estimated 1.4 million homeowners will need to remortgage their home this year. Remortgage in a high interest environment, ultimately dismantling and degrading the final figure of your final net worth when you reach retirement, because you won't have that much money left over to invest into things like a retirement plan. Mortgage lender Nationwide Building Society said on Friday the 13th of January, Friday the 13th just being a simple coincidence, that first-time buyers are spending on average 39% of their take-home pay on mortgage repayments alone, the highest level to the horrific year in 2008. Now look, it does look all doom and gloom, and let's be honest, it really is. First, I just wanted to unpack this information. There's a lot of numbers there, and people are going to be confused and just probably clicked off already. So if you're still with me, just bear with me for just a second, because I'm going to make things sound a little bit more simple. The simple numbers are over 250,000 homes in the United Kingdom are expected to miss payments this year, miss out on their mortgage payments, and ultimately are playing a game of catch-up. Meanwhile, while they fall behind, the rates are going to continue to increase and things are going to be more and more expensive. So they're just going to fall further and further and deeper into a hole and ultimately be left behind. Inflation is expected to slow down this year, but it's still going to be increasing at an alarming rate. And you have to really include last year's inflation, add them two together and say, has your salary increased at that same rate? And the answer for majority of people is just no. Hence the reason we have this problem. These 750,000 people, and on top of that the other 500,000, are at severe risk of losing their homes. Now, not all of them will lose their homes. A lot of them will dig deep and find a way out of it. At least that's what I hope. But I tried to find the figures of what this statistic looked like in 2008, and I really couldn't find it. So if anybody can find what the actual rate of people falling behind on mortgage repayments was in 2008, let me know down in the comments, and I'll try and pin the most accurate one, because every statistic I found was very, very different, and I didn't feel comfortable sharing it. So here's a statistic that we can be confident of. In 2008, 40,000 people lost their home. A horrible statistic, but 40,000 people losing their home is a lot less than 750,000 potentially at risk this year alone. It shows that we have a bigger problem on our hands. Not to mention 2008 had half the problems we have currently. That was just a big financial bubble, and ultimately just everybody was overpaying for everything with a bad financial regulation system. They did not have a war, high inflation, a struggle, a cost of living crisis, and literally every sector of workers seemingly on strike, not to mention a US president who cannot simply walk up the stairs. People really, if they still haven't woken up, need to stop thinking it won't affect me, because it will. I promise you, it's going to affect everybody. Nobody is safe from this. I ultimately do not have a mortgage. I don't have a mortgage on any of my properties, and it's still affecting me because people cannot pay their rent. People cannot pay other aspects, and you have to decide, do I have my property vacant or do I lower the costs? Either way, it's going to affect even me, and I don't bloody live in the UK anymore. So look, what can you do about it? Well, the long and short of it is you need to toughen up, soldier. That's the tough words most people need to hear. You could say you need to save less, cut down on your Netflix, cut down on your gym memberships, and so on and so forth. Don't go to the gym, just go for a run. It's ultimately free. And all of this is correct information. But the thing is, majority of people won't do that. They'll say they're going to, and then they'll forget and say, let's watch Prince Harry talk shit on his family. I want to tell you a story. This is a real story. A good friend of mine, one of my closest friends to this date, his mother was a private nurse. She had a bit of money. She was doing quite well in life. And his father owned a building company, also doing pretty well. Let's say in the middle to upper class of the middle class. Pretty much where majority of people who are investing and probably watching this channel are sitting. Unfortunately, his dad passed away in 2006. In 2005, the year before, they just moved into a new home. It was a comfortable house up in the northeast of England, not too flamboyant, something that you think they would be able to afford comfortably. When the crash hit in 2008, as a single mom, she just couldn't cover the house. It's not like she had bad credit or anything of the sort. Her salary was simply capped. There's nothing she could do. She ultimately fell behind on payments and was eventually forced out of her home with her 2 kids. There was just simply an oversupply of houses, something we may see happen soon. And oversupply is probably not the right word, more like a lack of buyers with people forced to sell. I've talked to her many times on this and tried to learn from her because she's the person who I've seen struggle more than anybody at this time. And it's a lesson I'd love to pass on to you. It's a lesson I pass on to a lot of people I speak to in general because she didn't mess up in any way, shape, or form. She bought a house for $240K. Her income between her and her husband were about $100K per year. Easily afforded? No, not anymore. When the crash came, her house fell to about £170,000. Meanwhile, she's still having to pay a mortgage as if the house was valued at $240. Then rates started to increase. She went into negative equity and eventually was very close to filing for bankruptcy. The bank then went and gave her an ultimatum. She had to do a quick sale. She had to sell at $155K and she paid $240. All in all, she lost her deposit, basically left the house with no house, a bill of debt with nothing in her hand to show for it, and had to restart from square one, all while still having to repay the negative equity she left on. Eventually, she did get back on her feet and she's smiling happily every day, as even then, to be honest, she was. She's an utter warrior of a human. But the problem right now is, I genuinely think after this ultimate bull run we've had in pretty much every market, for too fast, for too long, people have been overpaying. And what happens to a market when people stop buying things and the debt loans are called in when we're in a high interest environment? There's many dominoes lined up perfectly to fall, and I fear that more than 40,000 people will ultimately lose their houses if we don't think of a solution. And you have to ask yourself, is our leadership up to fixing this? Left, right, down the middle, it doesn't matter. The answer is on a postcard. The reason I'm telling you this like it is, and this video probably won't even do well, it's not here to scare you, it's here simply as a warning. Do what you need to do to make your mortgage payments happen.
Sherlock.
I know it's easier said than done. Otherwise, you're just going to fall down that ladder to the bottom and eventually land in the section where mortgage lenders cut their losses and you'll have to leave your home. That's ultimately what's going to happen. You then could end up like my friend's mum and be forced to sell your house at a massive loss, holding a massive bag of debt, which you have to pay off before you will even be eligible ever again to get a mortgage. And all the while, all of this heartache, you're going to have absolutely nothing to show for it. If you have a mortgage, especially in the United Kingdom, now is the time to be building up your nest egg of wealth. It's extremely important, and if you do not, at some point in the future, you're going to be in a massive state of panic, especially when people start panic selling or are forced to by the banks. I mean, think about the market. Nobody sensible right now is looking at getting a mortgage, unless they're obviously a massive mortgage investor and they can comfortably take the hit. If you're looking at a property and you're looking at getting a mortgage, all of a sudden, you don't need to get just a 10% rate on your investment. You also need to get another 6 just to cover the extra mortgage. And that might go up, it might go down, who really knows? But a sensible investor is just going to sit down and wait. If you have cash lying around and it's an option, and I strongly suggest you do this because I've just told my parents themselves to do this because they do have cash lying around and they were looking at an investment, go up and pay off your mortgage as much in advance as you can. It might not be an option, people have different rules on their mortgages, but if you can do that, or at least lock it away somewhere so that you can at least afford payments, it will help. Worst case scenario, you don't need it, and congratulations, you've got money sat around doing nothing, but it gives you a massive safety net. Good luck out there, be safe, and I pray your family is good throughout the next couple of years. Anyway, that video was very doom and gloomy, so what better way to finish with a dad joke?
God, please, no!
Why was the mortgage broker always calm at his job? Because he had mass interest in his work. That was really bad. Sorry, but you can blame Chat, GP, whatever it's called. See you in the next one.